Don't chase stocks that are up 300%. Talking about PRPO and why it's a bad idea to chase stocks that are up over 300%. Talking about it in this video, so stay tuned. What's going on, guys? So I want to make this little video kind of talking about how dangerous these stocks can be sometimes. How dangerous these very volatile stocks can be in terms of losing a lot of money. PRPO went crazy this morning. It went up from 50 cents up there to $1.75. So a massive move. And, you know, I saw a lot of people posting about how they bought it at $1.40, $1.50 area, and they were kind of buying it through these halts. And I'm sure a lot of people actually got dumped on right here as well, because these three halts just kind of screwed everybody up. It stopped all the momentum, and the stock was basically done. And it's very important to understand that just as fast as this stock can go up, it can go down even faster. So there's a good chance that PRPO could be back at 50 cents by the end of today. It really could. It could literally be back exactly where it started at, and you could lose a lot of money here. So let's say you bought 5,000 shares there on PRPO there at the $1.50 area thinking it's going to go to the moon. Well, then all of a sudden it gets halted, and now it's coming back down. You can't sell. It's halted again, and then boom. Where are you selling at? You can't sell till the $1.20 area. When these stocks just start going crazy and it looks like they're just going to go to the moon, they're probably going to get halted, or they're going to have an issue and they're going to crash. So you want to be very careful. You can see the 1 minute chart here on PRPO and kind of get an idea of what was really going on here. So the volume was increasing, volume was increasing here through this move. So the market opened, stock starts moving. You get this move from 50 cents up here to 80 cents. So at that point, it's like, okay, all the scanners are picking it up. People are starting to buy, consolidating right there, those three candles. And then we start making new highs, start making new highs, and then start to get this break over $1. So that break over $1 there, that's where I jumped in at. I jumped in at the break of $1 with the idea that, okay, I'm looking for that break over $1, possible 110, 120 area, and then I'm kind of jumping out. And you can see it got up here to $1.08, $1.08, $1.10 there on these next three candles. So similar pattern. So we got this, you know, boom, big green candle, get this consolidation, has to kind of come closer to the EMA there, trying to find some support, and then looks what happens. So we're turning that dollar area into support, and then we get this big move. After this, it really just started to get crazy. And you can see it goes from $1 up here to $1.34. It gets halted. Well, after that, it jumps to $1.60. So then it's just like, hey, there's a good chance this might crash for a couple different reasons. There was resistance at the $1.45 area. This jump over $1.45 really wasn't because of the resistance, or because it was more so just because of the halt there. So it was halted right there before that resistance, and you can see what happens. It jumps above $1.45, gets up here to $1.75, and then starts to crash. It's halted 4 times, and this was not good. So if you were buying here for this break over $1.50, hopefully you got out in time. You could have gotten out maybe you got out in time. But a lot of people, I feel like, were waiting for that $2 break. I probably would have been waiting for that $2 break if I was buying there at $1.50. But looking at this, I was like, hey, it's looking too crazy. It's too good to be true. So a lot of times when these stocks are too good to be true, there's a reason that it's too good to be true. So I think when a stock just starts getting too crazy, you got to just know when to pull the plug and to get out of it. You know, when I bought there at $1, it wasn't that crazy yet. It was up 100%. Hey, it's not insane yet. Well, then it's up 200%. Okay, now it's getting crazy. And then it's up 300%. Now I'm getting out of it. I got to get out of it. It's just too crazy here. I'm taking profit. I'm definitely not buying this thing just as it's going higher and higher. You can see how overextended this got as well. It got above $1.50. Look at the 9 EMA here. Look at the distance between the 9 EMA. So the 9 EMA was down there to $1.30. Well, people were buying the $1.50, $1.70 area. You get about a 20-cent drop there. A 20-cent drop doesn't sound like that much, but on a $1 stock, that's a lot of money. If you buy, you know, 5,000 shares, that's a $1,000 loss if you lose 20 cents on this stock. So you got to be very careful. And you can see what happened. It literally got back below that resistance, that $1.45 area, got halted again, pulls down here to $1.30, and then reopened down there to $1.10. Once they become too good to be true, they start just going crazy, you know, 300, 400% move. You got to really just ask yourself, is it worth it? Is it worth it at this point to chase this stock? And that's one of the reasons I did not trade PRPO once it started just going to the moon, because I was like, this is not worth it. You know, I'm going to buy at $1.50. It might get halted. It might go a little bit higher, but I think I'm basically looking at the EMAs like, hey, there's like a 20 or 30 cent spread here between the EMA and the bottom of these candles. So I'm thinking that we're probably going to get a pullback. And look where it pulled back down there to $1.30 right there at the top of that EMA. It got halted again, so then it opened up below the EMA. But you can see that EMA is very important. Almost all of these crazy moves, almost all of them will pull back to the 9 EMA at some point. Because it's such a popular trading indicator, a lot of times people will wait. People will wait for that 9 EMA area to show as support, and then they'll be looking to buy. Because I'm looking to buy the dip where I know other traders would be buying the dip at as well. And that's the big thing when you're trading, is you're trying to figure out what other traders would be doing. Where are they buying? Where are they selling? Where are the short sellers? And we got to always be looking at these stocks like, hey, it's just too crazy. I need to stay away from it. When it's too good to be true, it normally is. The same idea if you're on some dating app and some girl looks like a supermodel and she's insanely beautiful and all of her photos are amazing. And you're like, wow, why does this girl want to talk to me? And all of a sudden she's asking you for your credit card information. There's a good chance that it's too good to be true. So stay away from things that look too good to be true. So I'm not going to be looking for a stock that's up, 300%. It's up 40, 50 cents off of the 9 EMA. Looking really top heavy, getting halted, and bad things happening. So you need to always understand the risk when you're trading these types of stocks. These stocks that go up really fast, they go down even faster.